Hello and welcome to Ask ByteTree. I'm Charlie Morris, your host for the day, and with me is Tom Salter. Hello, Tom.
Hi, Charlie. It's nice to be back. We've had a week off.
So Tom's very excited because tomorrow, Team ByteTree, all the ByteTree employees, of which there's a little gang of us these days, are all going to meet physically in London and have a little conference, and then we're going to go and have some lunch. So there are people who've been working for the company for nearly 2 years who haven't met other people working in the company, which is quite extraordinary. Only in recent years would that have been possible.
Yeah, well, I think that in a digital world, it's going to be weird to put a face to everyone. Hopefully, I'm a bit taller or not smaller than people think I'm going to be.
Well, Tom's already admitted to me he misses the concept of an office and would like to spend much more time doing that. But I can tell you, after 20 years of it, you probably quite appreciate not doing it. But I totally get how the young people would have much more fun and be more engaged in an office environment. But we're going to talk about my piece this week to kick off with, and the main sort of point was really to highlight our flows. And the big story, I suppose, is that the closed-ended fund structure, which was dominated North American Bitcoin funds in recent years, obviously Grayscale being the first, has basically ended. And Grayscale and Osprey are going to continue, but virtually all of them have now shifted to these new Canadian ETF structures. Purpose led the way, and they're all following through. 3iQ CoinShares is we saw the outflows from the 3iQ fund, and after all, and back into the CoinShares 3iQ product. And so North America's gone ETF. Europe's always been ETF, and that's great. And the advantages, of course, that you can buy and sell Bitcoin at the price of Bitcoin. Now, whether that's $10,000 or $100,000, you get the price of Bitcoin. With a closed-ended fund, you get something else, either a higher price or a lower price, but that's unwelcome. It's the uncertainty associated with closed-end funds is not so good. Yeah, Tom.
Just a question on that. It seems such a wild concept to start with closed-end funds. Is it regulatorily easier to do a closed-end fund? Like, why didn't they just start with an ETF to begin with?
Well, because it was regulatory much easier back in the day, because Grayscale probably got away before anyone knew what Bitcoin was, I imagine. It was launched in 2013, and so it was a bit of a sneaky one. And as soon as people knew what it was, then it was very, very hard to launch products because they had the opportunity to say no. Now, closed-ended funds normally, there's lots of different things going on, but normally they're the great friend of illiquid assets. So typically you'd use them for property, for real estate, or you might use them for infrastructure. It's very popular these days, or for renewable energy assets like wind and solar and so forth. And they pay an income. Now that would be a very popular structure. Sometimes you get these investment trusts with underlying liquid assets, which are great. Some of them have been going for 100 years. But they're not launched so often these days because the ETF has really taken the limelight. But the point is, the underlying assets, if they're illiquid, then the closed-ended fund structure is ideal because you can trade the shares willy-nilly as you like, and then the underlying assets don't have to be created or redeemed. Yeah. And so, yes, in the case of owning something like a property portfolio or an infrastructure asset, it makes complete sense. So the share price goes too high, goes too low, but that's the trader's opportunity. But at least it's a solid holding vehicle for illiquid assets. Now, Bitcoin is a highly liquid asset, so it doesn't need a closed-ended structure anymore. And so, because the regulatory environment has enabled the ETF in certain jurisdictions, particularly Europe and Canada, then it's thriving. So all the money's heading that way because it's an ideal vehicle for an institutional investor in Bitcoin. And the other point was, after the movement, really we lost about 8,000 Bitcoin in the month of May from institutional investors, which is not much. It's really not that much. There are 800,000 Bitcoin in these funds. To lose 8,000 isn't that bad. But we got to remember that the miners are printing roughly 30,000 Bitcoin a month. So the price went up a big time in Q4 when all of those Bitcoin that were mined were gobbled up by the funds.
Just to touch on that figure, you said 800,000 Bitcoin in the funds. That I believe the figure was nearly 5% of the total active supply of Bitcoin. And when I read that figure, it did sort of go wow in my head, because I feel like from a media perspective, and we'll touch on this later, it doesn't seem like that people have covered in the media that 5% of the total active supply is held by institutional funds and high net worths. I think that's a really staggering figure and sort of underrepresented in the space.
And it's a number, yeah, you make a point. It's a number that's going to grow. And of course, those coins will be held in cold storage, and so they'll be dead in terms of network activity. So, you know, less people sell them, they're just going to sit there and be hodled for years and years, which is fine. You know, you need balance. You need some active coins, you need some dead coins. It takes both to keep the system going. But then in the last few days, we've actually had a couple of days of inflows. They've been tiny, and but that's fine. I think the point is we haven't seen massive outflows, which was a real risk a month ago. We didn't see it. So people are going, Bitcoin is volatile, it's halved. Okay.
I think it's the first time ever. I mean, in 2017, I'm sure you'd agree with this, Charlie. It dropped and everyone thought it died. But it's nice to see, you know, 50% drop and only, let's say 1% of what they held now are going.
Yeah.
I agree.
No, I totally agree. Now, Tom, Bitcoin was $64,000 a month ago or a month and a half ago. Where did it fall to?
32, wasn't it? I think.
Do you mean ByteTree Fair Value?
Oh. Wow, that's convenient, isn't it? Yeah, I think it's nice. I think we were saying it 2 weeks ago that actually we welcomed a bit of a drop and back to the on-chain data and the fundamentals in the space. And I think that is the fair value, really, isn't it? It's our take on the on-chain side.
Yeah, because this link between network and price has stood the test of time. Funnily enough, it's been most inaccurate this year of all years, really, in the Musk days. And I think the 12-week average, we've got $37,000, but the 1 week average is much lower. It's sub $20,000 now, so it's gone down again. So unless we see a lot more activity, then we're still saying that Bitcoin is basically twice as high as it should be. Yeah, we're saying Bitcoin should be closer to 20K than 40K, and that's pretty unwelcome news, I think, for many. But that link, as I say, that link between the amount of activity in the network and the price, it has worked well. And I don't see why it would just stop working. Indeed, it's just worked again, despite being dislodged for a few months in the hype cycle. So why is the traffic collapse so much? And the only explanation I can really dream up is China. It's just, lots and lots of people in China, for whatever reason, have stopped using Bitcoin, whether that's, bad actors, good actors, pressure, politics, who knows? But there's just a massive drop in network work activity, whether it's transactions, you name it. I mean, the average transaction fee was $50 a month ago. It's now more like $3 to $5.
Yeah, and I just to add on that, I think for the first time, we all joked about China banning Bitcoin or banning buying Bitcoin before, but I generally do believe that this time around, with the slight attack at the mining side, that we have actually seen quite a large drop because of it. I think people underestimate the mining, how massive, those people can transfer massive value quickly. And when you take away quite a large subsection of them, well, we've seen it in the network. It does affect quite a lot.
Right, Tom. So we've seen Bitcoin go down a lot. We've seen it have a nice bounce the last couple of days. It's volatile. Volatility is over 115%, which means we should readily expect 6-7% daily moves, and we're seeing them. Now, if we break 40,000 the upside, I think that's technically really interesting. I do find that hard to believe with fair value so far below, and with price them so far apart. I'm not confident about that. But this 30 to 40 range is here to stay until proven otherwise. Basically, I think that would be a simple view. Can you talk about the Kusuma, Tom? because we've been looking at the relative highs and lows in the space, and so we've seen all the shakeout of Bitcoin. Looking at the altcoin universe, what's doing materially better, what's doing materially worse, and there's a few things which really are starting to really tumble big time. But some are fighting it, some are really holding up well, and Kusuma's one. So talk us through that.
Sure. So yeah, it's a really interesting point. We've started running a model recently, seeing the other coins in the space, because they are important as well. And Kusuma came up today. Kusuma is a parachain to the Polkadot network, and what its main priority is a testnet for Polkadot. So Polkadot is kind of like Ethereum. Some people call it, the main Ethereum killer, if you like. And essentially, it's an application network where protocols can build applications and allow people to put their money to work in a variety of different ways. So really, Kusuma gained a lot of traction in the last couple of days because they've testnetted an NFT marketplace, and people like it. You can use the protocol and everything. But it's nice to see, excuse me, it's nice to see an application an application blockchain apart from Ethereum gaining some traction in the space. I think we can see people maybe coming away from Bitcoin and trying to put their money to work elsewhere, possibly in a yield generating opportunity.
Yeah, some of these opportunities just really need to be communicated to people, because I think there are people, there's obviously quite a lot of people in the space who really get it and are really cleaning up out of all this, but that information just doesn't seem to spread. The media still talks about Bitcoin and Ethereum and doesn't go beyond that, for example. So that's something we're going to be doing lots more of, isn't it? Digging down into what we think is going to change the world.
100%. And just another point, we're just on transaction fees. So you mentioned that Bitcoin's fallen. I think it's worthy to mention that Ethereum has massively dropped as well. We're sort of seeing, we had a period of time between July of last year and a month ago, and it was the longest period of time where transaction fees were like the highest we've ever seen. But now they're back to it's denominated in Gwai, which is similar to a Satoshi. And essentially it's just dropped dramatically, and that's not because the network's got better at dealing with capacity. It's because the demand has fallen away, and people are a bit more wary about how they use their money in the space.
Very good. Now, Tom, I'm going to talk about Taproot now. Well, you're going to talk about Taproot, and then we're going to go to questions. So if anyone out there, of the hundreds of thousands of people watching this, not quite hundreds of thousands, but if you have a question, then please put it into the box, and then we'll get to it. So Tom, talk us through Taproot.
Cool. So Bitcoin is a technology, and behind all the El Salvador or anything like that, there is a community of developers working to really keep this technology ahead. And one of the most prolific things at the moment is Taproot. And Taproot is going to help with privacy. It's going to help with us getting more transactions into blocks. And all in all, it is a big proposal. So what we're seeing now, we're seeing miners really agree in consensus that they want Taproot to happen. So we've had a couple epochs of blocks. So that's 2016 blocks is one epoch. I think the last 2 or 3, it was a terrible turnout. We basically said that it wasn't going to happen in the first 100 blocks. But now we're at 98.3% ratio say yes for this. So if that happens, and we're dangerously close, which is dangerous, but it's a good thing, for this thing to be implemented in the future, and that does have really big implications. It's not a drop in the water. This will help privacy and will make the network be able to have more capacity,
which is good.
Yeah, very bullish.
No, it's exactly how we want to go forward. Now, moving on to the questions, and the important one we've got here, the big news from El Salvador, that it's now legal tender. Now, Tom, El Salvador's currency has been pegged to the US dollar for what, 2-3 decades? And the Salvadorian colon, it's called. Tom, in the rehearsal, I said, don't laugh when I said Koloff. There's nothing funny about that.
No, I'm trying to keep it in.
Yeah. So Bitcoin's now legal tender, which I believe means you could pay your taxes in it, basically. You don't have to accept it because there's an exclusion for people who aren't technically able to, which is rather nice, because if you're an old lady selling fruit or something, then being forced to accept Bitcoin would be a bit harsh, particularly when transaction fees a month ago were $50. Now they're probably a bit better, but I guess the Lightning Network and all that can come in here. But what do you think of the implication of El Salvador having Bitcoin as their currency?
Well, I obviously welcome a country doing something like this. They're the first country in the world to formally do it. But
can't you pay your taxes in Switzerland, in Zug, in Bitcoin?
I'd have to check. I'm not sure, but from what I've read, I think it's the first sort of bill to be passed through a Congress to formally accept it. On that point, they did pass it with a supermajority, which is basically a lot of the Congress actually agreed to do this, which is an interesting dynamic because you would have thought there'd been some resistance there.
Yeah, well, I think it's probably the majority agreed to agree with the president, and the others got shot or something. I don't know. I don't know how it works there, but remember Ali G in the Olympics in that film? I think it might be one of. I don't know. I'll probably read about El Salvador. It's probably a lovely place, but I gather that he's a populist president who loves technology and loves doing publicity stunts. So it sounds a bit like Elon Musk, doesn't he?
Yeah, I think there might be a bit of a power struggle there. But at the moment, everyone loves El Salvador, and I think Tesla's the devil.
Yeah, so I think it's a nice story. I'd rather have it than not have it, but I can't really see it having a meaningful impact.
No, I think it came at a good time. I'd agree with you on that. It came at a good time to we were dropping quite sharply, and we were a bit shaky as a market, and it might have given us a bit of a bounce, but I can't see any long-term positive implications.
So would you attribute the 2-day rally from 31,000 to 37,000 to El Salvador, or did you think it was volatility went down too much, that sort of thing?
I think it did go down too much, but I do think that helped. Everyone needs a catalyst at the end of the day, so it was good to have a catalyst there.
Good. Well, Tom, we're going to wrap it up there. No more questions have come through. So, audience, thank you very much for listening, and we'll see you next Thursday.
Thanks, everyone.
Thank you. Bye-bye.